Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. My name is Merlin Rothfeld. It's your Thursday afternoon edition. We're going to do things slightly differently than normal, because normally it's a wealth management, investment type of show for Thursdays. Today, we'll focus on the currency markets. Fingers crossed, my guest will be joining us here after our first segment. We have Reginald Ringgold, who's teaching a Forex class here in Irvine, California. If you guys have questions for Reginald, let us know. Send them in at powertradingradio.com. You have a little button there that says Power Blast. You click it, send them on in, and Frank the intern will actually do something today and bring them over to us here in the studio. Speaking of studio, we have some training going on here in Irvine, California, and it's great because we get to have representatives from all the online trading academies around the world. At this point, you guys should know there's 39 physical brick-and-mortar schools around the world to teach you everything you know about trading and investing, and there's an unsung team of heroes that help make all that happen. It's not just the instructors, it's all the admins, the faculty, all that, the counselors, etc. So we've got a whole bunch of them in studio today. How's everybody doing? Yeah. Testing our mic levels out on that one. All right, let's go real quick into the top 6 markets today, do a little quick overview, and then we'll go to some listener questions. We actually have some in-studio questions, which is great because they're going to put me on the spot here live. As far as our markets go today, let's start off with the number one out there, which is driving me absolutely crazy because it's happened the third day in a row. Last time I saw something this crazy was actually going to the local mall down here when I went to go eat a Din Tai Fung, and I saw all these crazy people playing Pokemon Go. That's for you, Mark. Pokemon Go, and it's just nuts. It doesn't make any sense. It's stupidity. Not Pokemon Go, but the price appreciation of oil is what I'm talking about. Bring up that chart, TJ. We've got the spot price of crude oil today. Look at that chart. This is phenomenal. Again, I told you guys I had an order right around $38.50 just a couple of weeks ago, and I was like, it's going to come down right around that $38.50 mark. And it came down to 39 and change, and since then has had just a monstrous run. Of course, a lot of this is actually happening because they're talking about part of the OPEC community saying, look, we should cut production, which I've been saying for quite some time, but 24.5% last 15 days for crude oil. Certainly those of you that are in UWTI are probably loving that one. TJ, bring up just for fun, UWTI. Now, I'm not an advocate of these triples, but if you look at the last 15 days on UWTI, you're looking at a 78% gain for triple long crude oil. I know. Everyone in the room is kind of gasping, going, why didn't I buy that one? Yeah. Three words that don't exist in our world, folks. Should have, could have, and would have. All right, on the day, we'll go back to that crude oil chart here, TJ. You guys got a whole futures list, but we'll get that crude oil up. As I mentioned, it was the best gainer out there, 3.31% out there for crude oil on today's session. 3.31. That was at 48.34. It's actually a little bit higher than that now, so it's continuing to drift up here in the after-hour session. That was number one. Number two, we'll go to Russell 2000. Here's the IWM. Similar picture. It's just kind of really just trending sideways for the last 4 days, even though you see some nice big up move on Monday, drifting down for Tuesday, Wednesday, and bouncing back today. The important part here is what happened on yesterday's session and today. You see we actually closed at the dead high yesterday very near the dead high yesterday and dead on high today. It was interesting the way these markets are trending today as well. They rallied for about the first hour or so, sold off during lunchtime, and then in the middle of lunch hour, they just rallied for the remainder of this session on optimism. So that put the Russell 2000 up 0.72%. Then we go over to gold, the old GLD. Here's gold price. Doesn't look as exciting as you saw out there with the Russell 2000, but some people saying we have a symmetrical triangle. Some people say it's a pennant formation. Well, you could argue that there is compression happening in gold here. When that typically happens, you end up getting a break, and the break would usually be to the upside, which would bode well for those of you that are long gold right now. On the day, you had gold up 0.65%. 1,357 is what we closed at for gold. That was number 3. Number 4, we get a tie. You can flip a coin here. We'll just do real quick. S&P and NASDAQ 100 were pretty much tied at 0.15% on the day. Excuse me, 0.22%. Looking at wrong numbers out here today always throws me off. 0.22% out there for the NASDAQ and for the S&P. 2,187 is what you're looking at for the S&P 500, and then I'll switch it over here to the triple Qs. And triple Qs are up again, 0.22%. 5,240 is what you ended up with on that one. All these three charts I just looked at, the Russell, the S&P, the NASDAQ, and now we'll take a peek at the Dow, all look relatively similar. This was our worst performer out there today, and it's kind of nice when you can say your worst performer was up 0.13%, which means pretty bullish day out there, a lot of optimism abound. And we could speculate on what the reasons are for that optimism, but we'll go into other topics on today's show. All right, before we get to one of the audience listener questions, I want to get to this one because it's something that I deal with on a regular basis and something I'm sure some of you will have to deal with in your own personal trading experiences when working with other students as well. Anthony says, Merlin, when day trading, how mechanical with mechanical rules, how normal is it to go days or even weeks without taking a single trade? It's actually fairly normal. It's not that big of a deal. It just happens. And actually, if you're going days or weeks without making trades, it tells me something very good about your personality type, Anthony. It means you're extremely disciplined and you're not forcing trades to happen. Now, one of the things that I did early on, and sometimes I'll still make it, is making a trade for the sake of trading, forcing something to happen. And usually when you force something to happen, it's going to end up being a losing trade and you regret it after the fact. So you're following your rules, which is great. He says, I only day trade futures, and it may look at about 10 different markets, and he trades 5 days a week. I'm finding that my rules keep me out of the markets a lot of the time, and I'm really only getting maybe 1 to 6 good trades per calendar month. The last 2 months in particular have been really slow for me in terms of trading frequency. What are your thoughts? Okay, frequency is not the issue. Are you profitable in those 1 to 6 good trades per month? If your net for the month is that you're profitable making 1 to 6 trades per month, then what's the complaint? Keep on doing what you're doing. If you're making 1 to 6 trades per month and you're losing your shirt out there and you're frustrated because of it, might need to make some changes to it. So to me, the question is not the frequency. Whether you make 1 trade a year or you make 1,000 trades a day, bottom line is, are you making money at the end of the month and at the end of the year? So that's what I would focus on. There's been periods where I'll go days or weeks without making a trade as well. It's frustrating to go weeks without a trade, for sure, because we want to be in the game, want to have some action, some skin in the game, but don't worry about it. Stick to your plans, and as long as your plans are showing you profitability, stick to those. If they're not profitable, then, Anthony, I think you might want to make some changes here and maybe not look necessarily just at day trading. Maybe look at the supply and demand grid and the mastermind community and say, all right, maybe I'll focus on some other levels. There's 30-plus instruments there that give you short-term trading levels, which can be used for intraday. If some of those levels are appealing to you, then maybe you want to expand your horizon from 10 instruments, maybe to 15 or 20, and look for other assets which might be moving. The other part there is if you're focusing on 10, my guess is it's probably S&P, NASDAQ, Russell. We already said we got the 4. They're all the same, so you already have 4 that are identical. You probably need to spread out a little bit more. All right, did we have a listener question out there? Do you want to answer a question? All right, come on, go to the microphone, tell us your name, and what's your question?
Hi, Merlin. This is Matt out of Chicago. My question was, as a trade is entered into either a supply or demand level, using the 3-to-1 instructed rule, do you suggest moving as the trade becomes profitable? Do you suggest moving a stop up to a break even?
Yes. There we go. Answer that question. Woo! All right. No, thank you for the question. It's a good one because there's different ways to approach this. Years ago when I started, especially when I was doing the day trading perspective, I used to trade for 90 minutes. And at the end of that 90 minutes, it was, I'm done. No matter what the trade was doing, I would close it, regardless if it was profit or loss or anything. So if you go back to the instruction that says, hey, let's look for a 1 measure of risk for 3 measures of profit. Of course, we want to get to the 5, 6, 10, 50 to 1 reward to risk ratios. It is important to move up. And the reason I think why you ask that is you're probably either yourself or the students you're working with are having an issue where they get to a nice profitable trade, you got your stop loss there, and all of a sudden it comes back down to break even, and then boom, takes you out. And at one point you had green on your screen. So yes, I do believe in not just moving it to break even, because to me that's frustrating. You have a nice profit, you move your stop up to break even, and then you get stopped out, and you didn't make anything. So I do it to at least cover my commissions and a little bit of, maybe give me $10 worth of profit plus pay for my commissions. That way you can say I had a winning trade. So I don't bring it to just even. I do a little bit higher. And then I think it's important to continue to let that thing run, even if it does hit your target. So let's say you've gotten your 3-to-1 achieved. You're at that point. You have one of 3 options. You either close your trade out entirely, you take off partial, or you let it all run. I would take off half of that trade, and I would let the remainder of that run, because I can tell you from personal experience, there are times where you have a 3-to-1 and you take it all off the table, and 4 or 5 days later, a week later, it's now a 30-to-1 reward to risk ratio. You would have had a 30 times winner, and you just let it go. It's like crude oil. We got a listener also talking about a euro trade where he bought in at 111, and his target was 112. All right, so he's going to go for 100 pips on that. Well, since then, it's rallied 300 pips. So yeah, let these things run, put on trailing stops, and of course there's metrics to figure out exactly what those trailing stops should be and how we should approach those. Of course that's taught in the classroom, and there's all kinds of mechanics there, but we won't get into that on this show. So thank you for the question, appreciate it. We're going to take a quick break. When we come back, I don't know if Reginald is over there. I haven't seen him, so you might be alone in studio, which is always fun. He's over there? All right, we got Reginald here. Perfect. We're talking global currencies when we come back after a short break. If you have questions, it's pretty simple what to do. You go to powertradingradio.com. There's a little tiny button there that says Power Blast. If you click on that one, you type in your question. Frank, the intern, will bring it to us here in the studio, or you can go to @TraderMerlin if you feel like using Twitter, in between updating all your Kardashian feeds. We'll be right back with Reginald Ringgold at powertradingradio.com.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. It is your Thursday edition. Our studio audience is now gone. It's got quieter in here, but now we'll step things up. We got Reginald Ringgold here with us, and we're going to talk about global currencies. Reggie, welcome back.
Hey, glad to be back.
You are here in Irvine, California. I'm assuming you're teaching a Forex class this week. Am I correct?
Yeah. It was futures last week, but this week is Forex, and it's been interesting. We've been having a lot of fun.
You know, it's always my problem. TJ's so good about this. I'm always the one who doesn't plug in my microphone.
Oh, so I'm the only one on live.
You were good. You were good. You were loud and clear. I was a distant relative over here. I was speaking through your microphone. Cool. Well, you know, with these currency markets, we've had a lot of listeners send in messages talking about how challenging it's been. And I'm looking at it going, well, you know, challenging just might mean that it's unpredictable. I mean, there's definitely been some crazy wild swings out there. So what are your take on, I know there's always different instruments, but overall, currency market-wise, what's your take?
I would say, honestly, I love when the currency markets are like this, and I'm going to tell you why. It's because I'm a diversified trader. I trade in multiple markets. I make a living off the market, so I need to be able to consistently draw profits. And
there's always something moving.
Correct. And then when it's not moving, I can play time decay, selling calls and puts.
Okay, so you're an options guy as well.
Yeah. I just, if for instance, ever since the Brexit, things have been slow, but the summer doldrums, it's always, you know, kind of slow. The market can be seasonal. It has seasonalities.
Sure.
So therefore, you have to learn how to adjust your approach based on the different cycle we're in. So during the summer, I don't have my foot on the gas as much because I understand that it's a little different. Plus, the big hedge fund managers and the big banks, they're typically on vacation around this time.
Which is interesting because, you know, normally we do have these flat, not a lot of volatility, not a lot of volume type summers. This one I feel is a bit of a different.
It's been a little bit jumpy.
We have had some pretty big swings. I mean, you look at what's going on. I mean, I'll bring up some charts here, TJ. We'll bring up a couple just to show, for example. But if we look at the summertime, I mean, generally we're talking about, you know, from July on. Well, here's the euro-US dollar. It's had some really big swings, especially since the end of July. The dollar index, that's another good one. And
we saw a good move earlier this week, and then now it's, you know, kind of sitting. But
we'll go
demand.
We'll go look. I'm just going to click on the TJ. Just click on a bunch of different futures contracts so we can see here. Here's crude oil. I mean, obviously huge swings. These may not look that big, but they're massive. So this typical quote-unquote summer, which is supposed to be slow and uneventful, has actually become extremely volatile, and I think that's the challenge out there. And I love what you're saying, which is, look, I need to be able to kind of know when to put my foot on the gas or when not to. And if you're planning on markets kind of being quiet and all of a sudden it's totally volatile, you have to kind of stop what you're doing and regroup.
Correct. Now, one thing I will say is, even though there's been a lot more volatility, you have to figure out what's creating it. A lot of it is news-driven.
Right.
Now, you can trade news in equities. You can trade news in futures and options. In Forex, it's a little different.
It's a little harder.
Because the spreads, you know, they can really start to mess with the trade. So it's important to be diversified. You guys are in luck because we have each asset class.
Yeah.
You know, and in order to be able to be a complete trader who's trading, you know, in each market, each cycle, you know, you have to be able to diversify. So that's why at this time, you know, I can play a Brexit by going in and, you know, selling a put, right? Or selling a call in June, for instance, when you had it drop, right? So a lot of times, there's certain markets where it's more suitable. For instance, in the morning, you know where I'm at. I'm going to be trading futures, right? 9:30 in the morning, right? I'm Globex trapping it.
Nice,
right?
Let's go back to this dollar chart here, TJ, because as soon as I brought it up, you were like immediate to go, oh man, we got a nice one. This first off, before we dive into what's set up our analysis. For those that aren't able to view this in HD at home, really since 2015, the dollar hasn't done much. It's had some big swings up to just barely over 100, and you could say low point right around 92. Right now we're different at 94. The last couple of weeks have been extremely bearish. I think that is obviously coming on the heels of a lot of people anticipating the Fed not raising and actually potentially cutting and going negative on rates here soon. What were your thoughts on the dollar? What was that setup you were talking about?
Well, the dollar is actually moving into demand. It's kind of getting a little close to a demand level, and I love the dollar. The reason I love the dollar is because it drives a lot of our universe. As it's the reserve currency now, I mean, who knows for how much longer, but it drives the universe because a lot of things are priced and quoted in it.
Right.
So it is kind of the gauge as it sets the mood for me in the beginning of my trading day and my trading week, because if the dollar index is in a key area, it's going to drive the stocks in the U.S. market. It's going to drive the currencies that are the dollars, the quote, or the base. And then it also will drive futures instruments where it's priced and quoted in dollars.
You know, historically there's been that an inverse relationship. You know, if we see real dollar strength, then the equity markets will generally suffer. You know, we've seen over the last couple of weeks the dollar index take a pretty sharp decline, and I'll have TJ just real quick bring up S&P. It's not, actually, see if you can bring them, do one on top of the other like you do, oh Magic Chart Master. Bring up one on top of the other just to make it easy for us. And I'll have them put the SPY if you wouldn't mind, and then put the dollar index on top of that just so we can see the comparison between these two. There we go, paste the window, there you go. All right, dollar sign DXY. So, you know, we've had that sell-off, but I find it interesting. I feel like something is slightly amiss, maybe slightly broken, we'll say. These are showing kind of the same thing. And
yeah, the correlations are starting to get out of whack,
It's out of whack. You know, back here in February, the dollar was selling off, and you had a nice rally in equities, to be expected. And there was a lot of this chop was fine. But right now, I mean, we've seen in the last few weeks, we've seen the dollar drop a good percentage. TJ is going to show us 3% in the last 22 days. And if we were to do a similar comparison on the dollar index, which we'll try to get right about the same points if you don't mind, you're looking at about a 1.8. So actually,
nice divergence, right?
Well, they're still kind of there, but it just looks odd. It looks just all right. So your thoughts on the dollar? You said it coming into demand level. How are we going to play that?
Well, as it gets low on the curve or in demand, obviously I'm looking to be bullish. The dollar really drives my week and my day for the majors. So if the dollar does get any lower, I'm only going to be bullish moving into next week.
Okay.
Yeah, because I don't really like to go against being in an area where the bulls are in control.
And so you're looking down into here, down around this 93. I mean, the 93 mark looks, it'd be a solid level. And I think at that point, you know, you're looking for a bounce in the dollar, which would imply, you know, a sell-off in the equity markets.
Now, I will say this. I hate when you base too close to a zone, because then you get the bounce and the ping pong back and forth. So hopefully we don't base as we come down, you know, into that area.
All right, no basing in the zone. It almost seems like a T-shirt. No basing here. All right, TJ, let's bring up this one from Glenn, that EUR USD, and I want to look at two different things. There was one question that came in about going long, another one about from Michael, so we can look at two different things here. Glenn says, the euro's looking good, but running into highs post-Brexit. Would you be willing to short at the 114 level? So throw me a line on 114 if you wouldn't mind, TJ, which we are coming up fairly close to that one. We're almost there. We'll just get the exact number. What are your thoughts on the euro? I know they're beleaguered and everyone thinks they're going to be just getting crushed by the Brexit. Hasn't happened.
I mean, they're saying they may exit, they may not exit. I mean, obviously, you know, the market's kind of calmed down from Brexit a bit.
Yep.
So it's back to basic supply and demand. As you see, we're in a supply zone. Again, this is inverse to the dollar.
Right.
So if the dollar shows me bullishness, this is the first thing I'm going to look at. So the only thing you have to make sure is that, okay, if the dollar's in demand, is this in supply yet? There are times where it might not be there, or it might break through and create a higher high breaking through the supply. So watch that closely, because even though it's correlated inversely, they're not going to move exactly the same.
So let's say, for example, the euro here is rallying up, and I think this is great that Glenn asked us one, because it talks about some of those correlations that or direct or inverse relationships. So you got the euro-US dollar right now at 113.50, you call it 54, rallying up, and he's saying, look, 114 is where I like to go short. So, you know, based off that, you're saying maybe I wouldn't do it on its own. If you're saying...
Yeah, I would watch the dollar.
So let's say it hits this and the dollar's not at a demand level. Would you just not take the trade?
it's not that I wouldn't take it. I would be more comfortable with the trade. I'd have more conviction on the trade based on where the dollar's at. Now, does it mean I'd risk more on the trade? No. Right? It just means that I'd feel more comfortable and more warm and fuzzy inside about it.
Well, it's like the odds enhancers. That's one of the things you teach in classes. Okay, here's the price coming into, let's just, in this example, here's the price coming into a supply zone. And then we could say, all right, what are some of the other factors that might make me more comfortable, warm and fuzzy, as you like to say, have stronger conviction about making that trade, and that might be some of the odds enhancers. And one of the odds enhancers that I think, Glenn, you might be an online trading academy graduate just because of the level you're looking at, is the way that price had left this level. And of course, we know that this was driven by a one-off event. Okay, this is
you got to be very careful with those because they don't leave behind unfilled order flow. Algorithms aren't like banks.
Well, and it also was the second time it's been here. Third, if you look back to this level all the way back to the 12th of May.
It's a carbon copy.
Yeah. So I don't know if I'm that convicted about going short here on this euro, Glenn, at 114. I think there probably are some better levels out there. When we come back, we're going to throw some more lines on this.
Look at it, though, too. One more thing before we go. Does it have profit margin? That's what you have to ask yourself as well. A lot of us set and forget, not realizing that, in essence, if it's not a solid play based on Globex trap or news and volatility, you're pretty much foregoing the profit margin. So make sure that the profit margin's there, not only when you see the zone, but at arrival.
Sure. Yeah, and I think a lot of that, the profit, I think, to the downside is potentially there for the euro. It's a question of where's your stop going to be and how you're going to set that all up. Reginald Ringgold is our guest today. We come back, we are going to go over a question from Michael here, actually talking about realistic expectations, and when something exceeds those expectations, how do we deal with it? We'll also get to this question on the U.S. dollar, Japanese yen by Sarah. If you guys have questions for us, do us a favor, send them in at powertradingradio.com. We got one more segment with Reginald here, and then we'll go to your economic calendar, earnings calendar. So make sure you guys get those questions to us. To send them in, go to powertradingradio.com. You click that little button that says Power Blast. Send them on in. We'll get to all those questions as soon as we come back, right after a short break.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. It is your Thursday edition. We'll call it wealth management. Honestly, anything to do with making money is going to deal with the wealth management side of things. We've got Reginald Ringgold here in studio with us today, who's teaching a class in Irvine, California on Forex, which is great because it helps me analyze these charts for you. If you have any last-minute questions, send them in at powertradingradio.com. This one is from Michael, and he says, hope all is well. He says he's been having a rough couple months. He says he was in the Euro-US dollar trade recently that he wants to share with us. It's kind of funny because I think a lot of people feel these emotions on it. He says, if this isn't the definition of the market will go further than you think, I don't know what is. Basically, he was looking to go long, and he went long, I think, at 115. So TJ's got these levels mapped out. And let's make it a 60-minute chart here, TJ, just so we can see the finer details of this one. All right, so here's your U.S. dollar, Euro-U.S. dollar on a 60-minute time frame going back a few weeks. His trade was going long at 111.55. You can see the middle line there. His stop loss was at 111.40. Target was at 112. Now, this goes kind of back to what the listener was, or the guest here in studio was talking about on segment one, which was, it looks to me, and I'm hoping that this is it because it's actually just a great entry, that right here, TJ, put a yellow box on it. This is where this gentleman went long. I'm assuming this is where Michael went long as it dipped back down here on the evening of the 14th. Got in that little demand zone and just spiked right up and maybe hit his target. So let's talk about goals, expectations, what you should do when something hits your target.
First off, let's say, way to go.
Yeah, right?
Congratulations.
Right, a round
of applause. I mean, man.
Nice trade.
Right? Get her done. That was amazing. So with this particular trade, I love to leave a runner, a technical stop. We call it the last bullet in the chamber. And it's for this. In fact, most traders, when they're new, they always go for that home run, Merlin, where they're trying to go
want
for...
it.
Right. Every trade, we wish we could get 10 Rs, 20 to 1, right? But the way that you do it, there's a way to do it. The way you do it is you scale out. You have multiple targets. So if you leave the runner, there's the opportunity where you can find the trade keeps going and trail demand zone to demand zone. Right? Or when you're short, supply zone to supply zone. So the key is being able to break down the contract size. Forex, it's a great market because you can go all the way from standards to minis to micros. So it's very rare, unless you got a couple hundred, that you can't break down, right? Unless you're trading one micro.
Whereas with if he was long the Euro futures contract and he's got one contract, you're stuck.
You're stuck. Yeah, nothing you can really
Can
do.
you just sell half of it?
Calling up the broker like, please.
I just want to get out of a quarter of my contract, that's all. All right, so in this case here, and I'm assuming that when you're trading, you're a spot guy, so I guess it doesn't matter. But I was going to say, if you're trading futures, you're probably trading 2 or more contracts at once.
Yeah, if you can do 2, then you'd have the one, go for maybe 3 to 1, 5 to 1. The other one, just use a technical stop. If you have a technical stop and you're in line with the trend, Forex is long term. It's 60 minute.
Yeah.
So this is like a short term swing trade. So you can be in it past rollover and let her ride.
You know, and this one's great because going back to what you just talked about, if this was spot, which is he's in, he could have peeled some off once it his target, and whether that was on the 15th or the 16th here, of course, in hindsight, you wish you left it all on the table, but don't worry about that. You've made enough to pay for the trade. It's all house money at this point if you let it run.
If it stops at break even, I assume it is.
Well, I'm hoping he's moved the stop loss. I'm hoping he's still in portion of this, Michael. You know, and if you are,
it should be better than break even.
Oh, your stop loss should be way up here. I'd put my stop loss just below 113. Right below these levels.
Perfect. Right on the round number.
Now let's take a zoom out just a hair here and go back to our daily, if you wouldn't mind, TJ, just to show us that daily because he mentioned that 115 mark, and we've talked about the previous listener question, which was talking about 114. See if I can just move this one up. Are we on snap mode? No, we got it. So we got 114. But Michael is pointing out 115. Now, how would you go about? Cause obviously, this level would go back to June at 114. Look, it's been there. It's done that. It's actually because of the Brexit, so that might not be the best level.
Right.
How would you go about looking at this May level where Michael's looking at 115? It looks to me like it could actually be up around the 116 mark.
Yeah, I mean, for me, I would say this. The way that it left out as far as its angle before it
This one or this one?
Up there at the top.
Yep.
The top. I don't really like the angle. You see coming off the wick and then how it drops out? I like straight parabolic drops.
Well, no, we all.
Angle. Yeah.
You can't always get what you want.
But with that being said, you do have a little area where the cursor is.
Yep.
The wick, it ruined the party.
It did.
Because of Forex, the spread makes things variable. Now, the daily, you don't have to worry about the spread widening too much, but that made that level not fresh anymore.
All right, so you're going to say Ixve on that level, huh? All right. I don't know. I would break this apart.
You could go up to the top of the wick, but here's another problem.
Well, I'd want to break it apart.
That's what exactly.
Give me an hourly time frame.
You would
go
to the lower. Right.
Yeah.
That's exactly right. So you refine with the refining time frame because there's going to be a level in that wick. But that's the thing. Wicks kind of ruin the party for us.
They do.
Right? If they're too long, the zone's too wide. And then you really don't know what happened in the wick because it can go up and down, up and down.
I see what you're saying. Yeah, especially with this one, you're trying to do a zone. If you are versed in how we draw out our supply and demand levels, this would make it rather challenging for this can here. But of course, we would break that one down. All right, Michael, thank you for that one. I want to make sure we get to Sarah's questions because you're from San Francisco, Sarah. That's what we have to cater to my San Francisco peeps. USD JPY is our next victim out here. TJ, throw some levels on. I need you to put 3 levels for me since we haven't had a chance to prep this one. We'll just do it live as we go through it. We've got a target on this one of 105, so you can see the target there. We have an entry price on this one of 99.10. And we have a stop loss, which is hopefully going to be lower than that, and that's going to be at 98.8. All right. I already see problems with this one, Sarah, but we'll be as constructive as we can be. Zoom out, and we'll just take a look at the grand scheme of things. All right.
What's the trend, right?
Well, yeah. Okay, so here's our daily of the U.S. dollar Japanese yen. Obviously, dollar getting crushed. You can see at one point back in 2015, we were at about 125. We're almost at 100. We're actually, we'll call it 100 right now. We're at it. A great, nice psychological number.
Round number.
So she's saying, I want to go long at 99.10, stop loss at 98.80, and then a target of 105. So I'm going to have to break this one apart a little bit and maybe go, let's say, an hourly time frame because the daily, it just looks way too compressed. So here's our 60-minute time frame on this one, and you guys can see those levels mapped out there. I see what you're doing. I don't know.
We don't do it.
I mean, say no?
Put it this way. You can't just try to short at an all-time high or go long at an all-time low. Now, this isn't an all-time low per se.
Right.
But it's an area that was significant that we saw based on, was that, I think, the Brexit?
Yeah, this is
yeah.
this is June 26th. This
So
is the Brexit. Yeah.
I would say that wait for your pattern, wait for your trade, rather than trying to find an area based on a specific low where you feel that price can bounce off of. Unless there's a zone, a trade, a pattern, I don't know, I'm sure the crowd, there's all kind of different traders in the crowd, right? So
yeah, absolutely.
It's your trade that's in your plan that gives you an edge. If that's your trade and it's in your plan, hey, let it ride. But if it's not in your plan and you're guessing where price could possibly turn, that's really a no-no.
Yeah. So, you're in this case, you're saying that catching that falling knife is a dangerous position here. The overall trend, the glaringly obvious thing. Look, personally, Sarah, I'm okay if you take that chance. I agree with Reginald. I think that's very, very risky. But as long as you have your stop loss in place, in this case, it looks like you're willing to risk not much. You got a pretty tight stop on them, 30 pips? That's not much for the USD JPY. But your reward is ridiculously out of proportion. I don't think that you could logically expect to get to the 105 level without having difficulty, let's say, that 102 mark, or maybe even just the 100 mark. You know, there's definitely some other
There's a lot of ceilings ahead, you know, so she could be a little less aggressive with her target. But I would say keep in mind, you know, if you look at the trend, you know, and you understand trend analysis, the daily trend was very much well in the downtrend.
Yeah. Yeah, it still is. You know, it's and it looks to be like that's going to continue. You guys saw the U.S. dollar chart a little while ago, which does have some relationship to the U.S. dollar, Japanese yen. But for right now, it looks like that dollar is going to be trending to the downside. If you are taking this trade, Sarah, stick to your stop losses because I think you could see it drift down even further.
I agree.
Reginald, as far as schedules go, I know you're here in Irvine, California this week. Where's Waldo? Where are you going to be?
I think I'm off for a good month. They decided to give me, you know, some good break after that.
Well, what month is it? September, October?
Well, yeah, but I think I'm coming back here or Los Angeles. You know, I'm local now. You know, so it's good being back home.
I like being home. Home's good.
Yes.
Home is where the heart is, they say.
Yes, it is.
All right, well, guys, if you are interested in seeing Reginald teach, we'll get you posted on his upcoming teaching schedule as it does start to fill in. If you want more information on attending Online Trading Academy or any of the classes, whether that's going to be futures, currencies, commodities, real estate, psychology, stocks, there's everything out there, options as well. You can get more information by calling that number on your screen, which is 888-304-8723. That's 888-304-TRADE. Or you can click that free class button at powertradingradio.com, which is on the right-hand side of your screen. Type in your zip code to get you the information on the center that's closest to you. I like the miming in the studio. All right, so well, thank you so much for coming on. I hope the markets pick up. You get some great action for you. Guys, we're going to take a quick break. When we come back, I have economic announcements. I have some earnings announcements. We'll get to all those as soon as we come back right after a short break.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. I'm Roland Rothfeld, wrapping up your Thursday edition. I want to thank Reginald Ringgold. I want to thank Mark Patrick and all the Online Trading Academy staff that came in and joined us live here in studio today. That was a lot of fun. If you guys want to know more about trading the currency markets or a little bit of the details about some of these currency markets, do us a favor, send your questions in at powertradingradio.com. You can do that anytime that you like. Or you can learn more information about classes by going to powertradingradio.com, clicking that free class button on the right-hand side of your screen. Or better yet, there's a phone number on the bottom here which says 888-304-8723. That's 888-304-TRADE to get more information on any class. Now, before I go, got a question that came in from Gary here. He says, I have a short on USD JPY entry. If it hits 96.156. I had TJ throw some lines on here, and I just want to show you why that's kind of crazy. So you want to go short once it breaks below where my finger is right here. What? We want to go short there? I'm assuming you're thinking that you want to go long when it gets to that one. Otherwise, you're leaving a lot of money on the table if you think it's going to get down to this 96 level. If you think it's going to get to 96, then why aren't you shorting now at this point in time? Because you have a couple hundred pips before you even get to that level. So I'm thinking that you meant to go long at 96.156, but we'll have to wait and see, get some clarity from old Gary out there. All right, here's your economic calendar for tomorrow. It is not the most eventful, but we do have one major one, and that's going to be our preliminary GDP numbers. Of course, this is preliminary, which means let's just all take a guess at what our GDP data will be. And we know that the Fed in the meeting minutes has, of course, re-emphasized how important data is for this decision going forward. Personally, I don't think data makes a damn bit of difference to the Fed. I think that they're just going to do whatever they can and point the finger at every possible thing so they don't have to raise rates because, of course, raising rates would slow things down a bit. We want to keep this market looking robust, and let's just artificially inflate it even more. So GDP is part of that data coming out on Friday. You also had University of Michigan Consumer Sentiment Report as well as goods trade balance. So you have 3 coming out for the U.S. If you're trading the euro, you have nothing. If you're trading the pound, you have their second estimate GDP as well as preliminary business investment. And lastly, the Jackson Hole Symposium. This could create waves, all right? It was started out there today as well. You might have... oh, I love my life sometimes. So Merlin played a trick on me out here today. I'm looking at going, GDP's next week. And it's actually, this is all next week. So we messed up on today's show. You know what? We're not going to give you an earnings calendar out there. We're not going to give you even an economic calendar. If I remember correctly, there's one company coming out tomorrow, and it's... I want to say it's a Chinese insurance, but that's probably next week as well. So with that fub and flustered error out there, TJ is going to do me a great favor and go to a blue screen. That's right. This is like a computer. It's a blue screen of death. We're allowed to make mistakes every now and again. If you want, what I will do is I will post a link on the Twitter account that leads to the week ahead so you can get all the information about earnings announcements and economic calendar for tomorrow's trading session. Of course, the guest for tomorrow will be John O'Donnell, and we will have all the current data ready for that show. Until then, thanks for all those questions out there today. Sorry for the blunder at the end, but we'll make up for it on tomorrow's show. Stay tuned. We'll see you tomorrow. Take care.